All right, calls of the day. Jenny, starting with Disney, which got a price target raise today at Barclays, $135 from $95. Upgraded as well to overweight. Said shares could move more than 15%. Narrative reset they're talking about. They're going to lead the charge. Those are the words they use when it comes to sports streaming and cord cutting. 52-week high today for that stock. And, of course, we have the proxy fight, which is ongoing and coming to a head very soon.
Right. And narrative reset is really the key here. So way back last summer when it was at 79, what we were saying is it reminded us, frankly, of when Meta was at 89, where everyone just hated it so much. And what we were saying then is, this is a leading company. Like, people love Disney. It is an iconic brand with loyal shareholders. They've always led. They'll continue to lead. So it's nice to see that start to be appreciated. Now it's appreciated too because they've had a few good earnings reports. They've returned to earnings growth. There's some clarity. The valuation's reasonable right now. It's trading at 23 times earnings. Earnings are expected to grow at 24% this year, 17% next year, 11%. So it's very much back on track. But I think it's interesting when you say there's 15% upside. I think that's what there is. There's probably 15% upside. I don't think it's a double from here.
You know, the one thing that's interesting to me is that streaming profitability is still projected for the end of the fiscal year. So that's September 30th. That's not far away. Once that happens, the narrative then shifts to how profitable. And I think that's where you might get another leg up. You've talked about some things. And obviously, you know, ESPN, Hulu hangs out there. But what if we start talking about streaming profitability and it becomes a meaningful contribution to the net income story at Disney? I think that's the next leg.
I'm going to take this from a different angle, the angle that I began to take it from in December, where I said the stock technically looks really, really good. That's when it was in the 90s. Now the stock looks phenomenal. This stock is breaking out. It's held the gap from early February. It's above all its critical moving averages. And there are no momentum funds. There are no funds that are really allocated in the direction of Disney.
Yet.
This is one.
Yet. I'm thinking of one in particular. I know where he's going.
This is one of the best looking momentum stocks in communication services.
But at the same time, I'll argue, and this is as a
Why does it have to be a but?
Because I think math matters here. You know, and I don't see how a Disney starts to trade at 30 times or 40 times. I think it really should have kind of a reasonable, slightly premium to the market multiple on it. You know, and the earnings growth is
in early 2021.
It's not infinite. It's not like an NVIDIA earnings growth. It's a finite amount of earnings growth.
I want you to be excited about your investment. In early 2021, this was a $200 stock.
Okay.
If you can get Nelson Peltz,
that was then. This is now.
If you can get Nelson Peltz in the board. And the board to have some synergy, to cooperate on some good vision for this company, why can't it go back?
What's that boardroom going to look like if Iger's still CEO?
The reason why I can't is because I think getting back to $10 of earnings is very difficult. And when we initially bought it, that was the thesis, like that it will return to $10 of earnings. I think it will one day.
I'm daring you to dream. I'm daring you to dream.
Thank you.
I'm telling you, you have a great technical momentum, the likes of which you have not had in this company in years.
Okay, Netflix, Weiss, price target goes to $660 from $555 at Citi. They still reiterate it neutral, but they do hike target. I mean, it's at shy of 630 now, so you know, it blew past their other targets, so they had to make a move.
They had to make a move, and I'm sure he's telling accounts when they call him, look, forget what I'm saying here, buy it. They're the winner, pure and simple. Not only they're the winner, they're the profitable. It's an easily told story. Here's what we are, here's what we do. They're expanding what their offerings are. So look, it's a small position for me, unfortunately. I'm not adding more at this level, but I'm also not selling it. I'm just going to ride it because you're going to see with all these, look, unfortunately or fortunately, my family subscribes to virtually every streaming service, and you're seeing prices go up. So people are going to have to make decisions. Which do I want to keep? You can't keep all now. When they were $7.99 a month, you could. But now it's real money coming out of real budgets. And so I think you'll see Netflix pick up more subscribers as others lose.
Jimmy, Mike Mayo at Wells Fargo Securities goes on Citi to 80 from 70. He cites it as his quote-unquote signature pick.
Yeah, Mike's been very bullish on this, as have I, and I think this is now a time for Citi to just simply execute. Jane Fraser has laid out the plan. She's been executing on it, frankly, for several years. Now it's a time to just show the fruition of expense cutting and the rationalization of the international business. And I want to make one more point about Jane Fraser. She actually is investing in some key business. She's made some hires in investment banking and wealth management that could play out nicely. Those are not areas that Citigroup is very well known for. Maybe they will be in the future.
All right, Accenture and IBM named in B of A note as the best position to capture new AI and Gen AI revenue streams. So Accenture, the price target goes to $419. That's considerable upside from where it's trading now, Joe. You have it in the Joe T.
Yeah, I don't like, first of all, I didn't like the earnings report for Accenture. IT spending looks to be a little bit challenged. You heard the same thing from Adobe. The response to that has been negative. The stock has been pulling back to its critical moving averages. I think it's at a very important moment in determining, number one, what we do with the position, but number two, if it's going to break down further, which I think it looks like it's got the probability to do.
Jenny, you have the IBM part of this, and the price target's 220.
Right, and when I was on 2 weeks ago, another analyst upgraded it to a 220 price target then too. That was interesting because they weren't saying higher revenues or earnings, they were just giving it multiple expansion. Now we're seeing analysts start to come out and say, hey, there's this big piece of revenue that's up for grabs, and it's going to be earned, it's going to be taken by the older school companies like Accenture and IBM. I think there is wind at the back here. I think 220 should be easy to achieve.